Ladies and gentlemen, good day and welcome to KIMS Hospital Q2 FY25 earnings conference call hosted by IIFL Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jivani from IIFL Securities. Thank you, and over to you, sir.
Yeah, thanks. Good morning, everyone. This is Rahul from IIFL Institutional Equities. I welcome you all to the second quarter earnings conference call of KIMS Hospitals. From KIMS, we have with us Dr. Bhaskar Rao Bolineni, Founder and Managing Director, Dr. Abhinay Bolineni, Executive Director and CEO, Mr. Sachin Salvi, CFO, Dr. Nitish Shetty, CEO for KIMS Bangalore Cluster, and Mr. Srinath Reddy, Director, Business Strategy and M&A. Over to you, sir, for your opening comments.
Yeah. Good morning and a warm welcome to all of you. Just about 1 month back, that is on 9th October, we lost a crown jewel of Indian corporate world in the death of Sri Ratan Tata. He was universally respected because he was the conscience keeper of Indian industry. He is known for his values, ethics and standards. My heartfelt tributes to this towering legend. We have witnessed the fury of rains and floods in Telangana, Andhra Pradesh and Kerala during August and September months, causing havoc and heavy damage. As a part of our corporate responsibility, KIMS donated 1 crore to each of these 3 states for aiding the victims. Let me now announce our financial and operational details of Q2 24-25. It can be observed that there has been a growth under each and every parameter, both in quarter-on-quarter and year-on-year basis, reflecting the good work done by KIMS. Gross revenue of INR 782 crore, a growth of 19.4% on year-on-year and a 12.9% on a quarter-on-quarter basis. EBITDA of INR 223 crore, a growth of 23.8% on year-on-year and a 21.2% on quarter-on-quarter basis. EBITDA margin at 28.5% versus 27.5% in Q2 FY24 and 26.6% in Q1 in FY25. EBITDA margin, excluding other income, stands at 28.1% versus 27.2% in Q2 FY24 and 26.1% in Q1 25. PAT INR 120 crores in Q2 FY25 against 101 crore and 95 crores in Q2 FY24 and Q1 FY25 respectively. Operational results: average revenue per operated bed grew by 22.9% and marginally declined by 0.5% on year-on-year and quarter-on-quarter basis respectively. Average revenue per patient grew by 9.7% and 0.7% on year-on-year and quarter-on-quarter basis respectively. IP volume 55,741 grew by 9.1% and 12.2% year-on-year and quarter-on-quarter basis respectively. OP volume 4,73,989 grew by 12.2% and 12.5% on year-on-year and quarter-on-quarter basis respectively. The other developments that happened in KIMS. In the last quarter, I apprised you about acquisition of Queen's NRI Hospital in Vizag. I am pleased to inform that we have taken total control of the said hospital and we will see good results soon. I am happy to inform that we are making our foray into Kerala also. We have taken over Seachand Hospital in Kannur and entering into an O&M contract with Westport High-Tech Hospital at Thrissur. The expansion blueprint includes setting up a fully equipped oncology and transplant centers in Kannur and a 350-bed hospital in Thrissur, dedicated to advanced transplant services. These initiatives are intended to make high-quality healthcare available at Tier 2 and Tier 3 towns. Our launch in Kerala is preceded by a lot of immaculate preparatory work, particularly in identifying and recruiting best managerial and clinical talent, focusing on 3 C's: character, caliber, and commitment. Accordingly, we have inducted a band of highly experienced and accomplished professionals who are familiar with the terrain of Kerala and Karnataka. Their rich expertise and long experience is expected to yield good results. We had a press meet in Kerala which was well attended and drew huge positive response. I am sure it will translate into good growth in the coming months. We are also exploring further opportunities in Kerala and Karnataka so as to exploit the full potential of this new team. Let me give a brief introduction of these new executives joining KIMS family. Mr. Srinath Reddy joins us as the Group Director of Finance and Strategy, M&A of the Kerala and Karnataka clusters. He is a chartered accountant and a lawyer who held top positions in leading hospital groups and pharmacy chains over past 25 years. Dr. Nitish Shetty joins us as the CEO of KIMS Bangalore cluster. He brings with him 25 years of leadership experience in reputed healthcare groups. He had nurtured and helped institutes grow with his acumen and passion. Mr. Farhan Hassan joined as the CEO of KIMS Kerala cluster. He has 2 decades of experience in the fields of marketing and management in healthcare sector and has a thorough knowledge of Kerala healthcare landscape. Mr. Arjun Vijay Kumar joins as the Head of Finance and Accounts for the Kerala cluster. He is a chartered accountant with 16 years experience and worked in healthcare and the financial sectors with the global firms like Deloitte. Thus, these 4 professionals come with a collective experience of 85 years between them and are well familiar with the region. In all our expansion plans, we want to nourish the local talent flavor as they have better understanding of the local needs and expectations. We are confident that the new stream of executives will strengthen our bands and further in our growth trajectory in general and Kerala and Karnataka states in particular. I am happy to add that now KIMS has a presence in Guntur of Andhra Pradesh, which is one of the important and densely populated towns and quite near to the upcoming new capital Amravati. We have entered into an O&M agreement with Insignia Healthcare Private Limited of a brand name of Chakra Hospitals, a multi-speciality. We have also entered into MOU with V2 Healthcare Private Limited, Chakra Hospitals, an exclusive oncology center. Already we have a strong presence in Andhra Pradesh and these initiatives will make our impact stronger. We are confident of good results. A good portion of these expansions will be met by internal approvals and also by prudent debt to the extent essential. Over the next 2 or 3 quarters, the debt to EBITDA will be, as we promised, around 2 in the wake of these expansions. KIMS always encourages the doctors' equity. Likewise, here also the doctors and key personnel will be investing in the project, resulting in a sense of ownership and increased responsibility on their part, besides impacting cost of funds. Our hospital at Nashik and Maharashtra is operational and poised for a good growth. All other projects are running as scheduled. The acquisition of Vizag unit and a commencement of operation at Nashik result in adding up 625 additional beds. Post shifting of Sunshine to the new premises, there is a marked improvement in its performance. Few of the academic accomplishments. The annual conference of Neurospine Surgeons of Association of India was held in Hyderabad with the participation of 450 spine surgeons from all over the world. On this occasion, a special workshop was organized by KIMS hospitals that received a lot of attention and appreciation. Serbian Neurosurgery Society, along with Internal Pediatric Neurosurgery and Southeast Europe Neurological Societies, recently held a conference at Belgrade with the participation of 37 countries, including India. 4 of our doctors, Dr. Manas, Dr. Dasarathi, Dr. Shaman, and Dr. Sandhya, presented their work done at KIMS to the forum, and it was widely appreciated and awarded. KIMS Hospital signed MOU with Intuitive, a global leader in minimal invasive care and robotic assisted surgery. Through this collaboration, KIMS Hospitals seek to enhance the availability of advanced surgical technology across geographies where access has been limited. It aims to improve the patient care in Tier 2 and Tier 3 cities. In addition, we plan to offer robotic assisted surgical training program to doctors in our associated colleges and institutes, further contributing to future of healthcare in this region. KIMS Hospitals, in association with Arrhythmia Research and a training center, conducted an education symposium with the participation of 300 cardiologists and electrophysiologists from Telangana, Andhra Pradesh, Chennai, Calcutta, Bangalore, and Delhi. The faculty included distinguished electrophysiologists from all over the country. The main objective was to highlight the importance of ECG in clinical decision-making of various cardiac disorders. We are pleased to convey that as many as 14 submissions from the Department of Rheumatology, KIMS Secunderabad, are accepted for American College of Rheumatology Convergence in 2024. At the annual meeting of International Urogynecological Association held in Singapore, our urogynec department had the privilege of presenting 9 papers and 1 lot of appreciation. KIMS Foundation and Research Center, KFRC, in collaboration with the Deaf-Enabled Foundation. This Deaf-Enabled Foundation started an exclusive telemedicine center with video interpretation for deaf. This initiative will make healthcare more accessible to the deaf people. Dr. Raghuram, our breast cancer expert, was bestowed an honorary fellowship of International Surgical Society. He is the first and only surgeon from Indian subcontinent in 122 years history of this prestigious organization to receive this highest recognition. 2 important clinical achievements I should mention here. Dr. Madhu Devarshetty, surgical oncologist and robotic surgeon, and his team completed 100 robotic pupils for pancreatic and periampullary carcinoma. This is one of the largest series in India, probably the highest. KIMS Sunshine Hospital achieved a significant milestone by successfully performing first ever epicellary knee implant surgery in Telangana and Andhra Pradesh states. This revolutionary procedure marks a new era in personalized joint care, offering hope to patients suffering from debilitating knee cartilage injuries. KIMS Kondapur Hospital recently reached the landmark of having successfully done 300 robotic joint replacement surgeries within a short period of time. I conclude now assuring that KIMS will continue to make its efforts to make healthcare more accessible and affordable with a quality care. Thank you very much. Over to Rahul.
Sir, should we begin with the Q&A?
Please. Yeah, we can.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Amaya Chalake from JM Financial. Please go ahead.
Yeah, thank you for taking my question and congrats to the management and good set of numbers. The first question I have is on the Telangana part of the business, where the occupied beds have come down during the quarter. However, the revenues have grown sharply from 309 crore to 370 crore. Is there anything to call out in this? Is it a case mix which has changed so dramatically from year-on-year basis, and is it structural in nature? Thank you.
No, I don't think there's any structural changes. It will only be a case mix change or an ALOS dip. If you look at the H1 last year and H1 this year, the ALOS has significantly come down.
Okay, so got it. So we should assume a partial seasonal impact in this, basically.
Correct.
Got it. And the second question I have is how many months of operation for Nashik and Vizag have been taken into this quarter?
Nashik, nothing. In fact, less than 10 lakhs. Vizag is 1 month revenue.
Sure. And just one query, if we add the 4 revenues of 4 different segments of Telangana, Andhra, Sunshine and Nagpur, it comes a bit higher than the overall group total. So is there any inter-segment revenue which is cancelling it, or is there some mismatch?
You're right. These are on account of eliminations which has to be adjusted in the Telangana cluster in revenue as well as EBITDA.
Okay. And the Vizag revenue will not be significant, what we need to say, during the quarter?
Yes.
Okay. And the last question I have is, we have announced a 3,000 bed ambition plan for Kerala cluster. Is it possible to give timeline to achieve this target? How much of this would be achieved by organic or inorganic? And there are certain established chains in this region, in Kerala region. How do you see competitive intensity there? And is there sufficient scope for your hospital chain to come? Thank you.
Srinath, you want to take this?
Yeah. Srinath here. Yeah. So we are looking at the addition of beds of the 3,000 numbers over a period of time. It could be in the next 5 to 6 years. And the way we are looking at it is it's a mix of both satellite model as well as greenfield. Initially, it will be mostly asset-light. The 2 new facilities that we have talked about, the chairman had talked about, both Kannur as well as Thrissur, is asset-light. Our focus is going to be, because many of them are approaching us on asset-light models in Kerala. Mostly it could be asset-light, but having said that, in the big cities, that could be in Kochi and Calicut, we would like to go with greenfield projects, but that is.
Sure.
Answering your second question was a lot of other groups are present. Yeah, definitely there are groups, but if you look at these are all local groups who don't have the national players. So we'll be one player which will have a national presence, and Kerala is one important state for us, being in the south. And because the management team and the doctors and others whom we have identified, they're all part of this earlier group, and we are pretty confident that we will be able to get good results, both from the growth as well as in terms of the EBITDA from this geography.
Sure. So, in just basically in tier 2, tier 3 cities, we will try to go or try to acquire or do the O&M kind of agreement with the existing hospitals. So that will not add new beds basically in those cities. Is that the right understanding?
Yeah, that is right. In tier 2, tier 3, if you look at the smaller cities, it's mostly asset-light, and the capex for that will be very, very minimal.
Okay. And
the city also will not see new bed capacity addition because we are already physically present and we are only changing the operator.
Okay. And overall capex plan, does it change because of this ambition, or is it still the same?
No, I think we'll still continue to maintain the debt levels that we spoke about earlier. And since all of these projects, at least the 2 projects that we spoke about, are asset-light O&M contracts, so it really doesn't have much impact on the debt position. It doesn't change much of the capex plan.
Sure. Thank you so much. I will join back.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good morning, and thank you for the opportunity. My first question is on operating costs. So, as multiple new units will be coming into your network in next couple of quarters, so how should we look at operating costs building up from here? And very broadly, what will be the broad impact on the operating margins? And extending it, since you have a big plan to extend into Kerala market, where we understand operating costs are generally higher than, say, Bangalore market, etc. So over a long period of time, how should we look at the margins from current levels?
Yeah, I think the three new assets that came into play this year are Vizag, Kannur, Guntur, and Nasik. And except for Nasik, the other three are running hospitals with some revenue. So there will not be much EBITDA loss from these companies. In fact, the EBITDA loss would be as low as 1-2 crores because they're already on the verge of getting on the verge of break even. And as far as Nasik, we're still pretty confident. Within 12 months, we should be able to break even. And for the first 12 months, we could have an EBITDA loss of at best 10 crores, 5 to 10 crores. As far as the other hospitals that are coming up next financial year, which is Bangalore and Thane, like we had earlier indicated, 10-15 crore loss per asset is what we're looking at. So cumulatively, a 30-40 crore drag on an EBITDA of the current scale and size, I don't think will impact the margin significantly.
So from these assets, which you discussed, annual drag of say 30 to 50 crore, not more than that.
The new ones that are going to come up next year, the ones that have come up this year, we will not see any drag except for Nasik, which will be to the tune of 10 crores.
Okay, and on a slightly longer term basis, when you increase your presence in Kerala, in that way, like how should we look at the margins?
Even if we do, so first of all, Kerala, we are pretty confident we should still be able to get to a 25% kind of a margin. And that is what some of the best hospitals in that geography have been doing. So right now we have these two facilities. We'll focus on these two. And we're pretty confident these two will scale up to 25% margin in near course terms.
Okay. Good to hear that. And then I have a question on the promoter pledge. So earlier, I guess you mentioned that there will be some reclassification of some promoter entities to public. So that should be bringing down the pledge part. But I guess September number doesn't reflect that. So how do you see that moving?
Actually, we have been applied to that. SEBI asked some queries. We are answering those things. Definitely, maybe next 1 or 2 months that could be done. And as far as after doing that, personally from my side, there will not be any pledge.
Okay, so yours will be completely taken off, right? Once that process is done.
Correct.
Okay. And my last question is on margins in the AP cluster. I think we have seen notable improvement there. So obviously, I guess we talked about case mix, etc. And this quarter, I understand there is seasonal benefit also. So where do you see AP cluster margins settling in very broadly?
Well, like we had always indicated, AP, there are still 1 or 2 assets that are, actually 2 assets that are still in their less than 20% margin. But over a period of time, once those 2 and the remaining hospitals scale up, because of the total beds in AP, 40% of the beds are still less than 5 years old. So as they scale up, we will be able to get to a 27-28% kind of a margin there.
Okay. That's helpful. Thank you very much. I'll get back in the queue.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Yeah, hi, good morning, everyone. Namaskar, sir. Abhinay, just wanted to understand your thought process in selecting Kerala as a focus market, especially given the plan to add 3,000 beds. Now, Kerala is also a slightly different market with maybe higher cost, etc. So just wanted to understand whether this entry, was it slightly opportunistic considering that we got a great team? Your insights will be really helpful. And maybe I have a follow-up there, but yeah, maybe your response here and then I can ask that other question. Thanks.
Abhi, can I answer first?
Yeah, go ahead.
So, if you take the healthcare in India, Kerala is the one which is matured more literally and understanding the healthcare, and the insurance penetration is more, and there will be a lot of procedures, and every small tried to also do very well. And there is a lot more gaps that are available in Kerala. There is a need. So with the team that has been totally understanding the geography much better than us, so that's why we are mentioning mostly we are going with a asset-light model. And that's why we have selected that. Anything you want to add, Nitish, on this?
Yeah, thank you, sir. I have a really vast experience in Kerala. My previous organization has a dominant presence in Kerala. What we have seen is in the last 10 years, Kerala previously has been a different market and was dominated by the government hospitals and charitable institutions. Last 10 years, and especially post-COVID, there is a general acceptance of a large private hospital. And when I say large private hospitals, that's much more among the organized players. My previous employer has opportunity and has grown well. But I see there is an opportunity for much players. The non-communicable disease prevalence is very high. The requirement Kerala is densely populated. The whole state is urbanized. And then most important thing is the clinical talent available. Even in the tier 2, tier 3 cities, you can get the super specialists in all specialties. Considering these opportunities, lack of the organized players, large players in Kerala, and the incidence of disease, and also the acceptance of the general population for moving away from the government hospitals and trust hospitals to private hospitals, especially for tertiary care work. Earlier, patients from Kerala used to go out of Kerala state for tertiary care work. When I say tertiary care, high-end work like neuro, cardiac, organ transplant. But they have accepted that now that can be delivered in the state itself. So since KIMS comes with a vast experience in organ transplant, cardiac, neuro, and all the cutting-edge work, and it has a very good high-end infrastructure models in other states, something similar can be emulated. And add to that, KIMS has a unique model of partnering with the local talent, especially the doctors. That model can further the growth of what KIMS in Kerala. In a nutshell, I see a huge opportunity in Kerala. When I say when it comes to other states, it's in the metros and the tier 2, tier 1. But in Kerala, it is in tier 2, tier 3 and more, and also in large cities as well. Thank you.
Appreciate the response, sir. Maybe the context to ask this question was also, we had till about 2-3 years back zeroed in on Maharashtra as the next EP Telangana equivalent for the company with a 5-10 year view. Now with the focus on Kerala as well as the additions coming up in Bangalore, have we curtailed our expansion plans for Maharashtra beyond the plans which you already announced?
So, Lanka, I don't think the plans for Maharashtra will slow down because of this. Whatever we announced, we are anyways committed to. We will also bring few more opportunities on board very soon, as far as Maharashtra is concerned. It's just that Kerala was a very unique opportunity. We had the right people who understand the market totally. There were a lot of opportunities to do asset-light hospitals, and being such a large state, we had multiple asset-light opportunities in that state. All we had to do is 1 or 2 greenfield over a period of time. So it made very strategic sense for us to consolidate our position in South with Andhra, Telangana, foray into Karnataka, Kerala. It makes us a very dominant and strong South Indian operator. But that does not derail any plans that we have for Maharashtra or how we want to expand in Maharashtra. Where capital required for Kerala is significantly low.
Understood. So basically Maharashtra, that earlier plan of adding as many beds, maybe more as what you announced in Kerala, stays over the next, say, 5 to 10 years.
Correct. That continues. It's just that Kerala, we have formalized it with a prestige. We didn't do it in any other state.
Okay, fair enough. The second question is, can you please take us through the progress in Sunshine and Nagpur? Sunshine was quite impressive this quarter. Nagpur saw healthy growth, but margins came off sequentially. If you can help explain the dynamics in both these markets. Thank you.
So as far as Sunshine, we were always pretty confident that it will do better than KIMS Telangana cluster in terms of its margin. And it took us a year and a half for us to show turnaround because we had to move from the current facility to the new facility. And right after it moved, the revenue significantly improved. We were able to onboard good doctor talent. In fact, the new hospital is almost reached a very high occupancy. Now we'll probably have to look at expanding that facility as well. So I think now Sunshine as an acquisition has reached 30 plus EBITDA margins. From now on, whatever incremental revenue, 40-50% will flow through to EBITDA. So we're pretty happy as far as that turnaround is concerned. As far as Nagpur, again, the revenues have stabilized. EBITDA margins are also healthy at 25-30%, between 25 to 30%. It's just that this quarter we had a lot of renovation and one-time expenditure work. So if you actually normalize the EBITDA, it would have been in the range of 15-16 crores, which is around 25-26%. So we are again pretty confident Nagpur will continue to deliver a 30% EBITDA margin as the revenue ramp up happens.
Understood. And maybe one final one, a clarification. When you said 10-15 crore EBITDA loss in Bangalore, does this include the second project as well?
So I said per center, we will incur a 15 crore EBITDA loss for the first 12 months of operations.
Oh, okay. So then, I mean, you also said 30-40 crore drag from the newer assets. So that doesn't include Nashik then. So 2 hospitals in Bangalore and the one in Thane would.
Correct.
Okay, fair enough. Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Participants who wish to ask a question may press star and 1. The next question is from the line of Benopati Paramveer from Elara Capital. Please go ahead.
Hi, good morning and congratulations for a great set of numbers. Most of my questions are asked, and so just a couple of bookkeeping questions. In your presentation, the total number of beds for at the end of the quarter is 4,610. But if I add up your 4 cluster beds, it comes to only 4,275. There is a difference of 335, of which I guess Kerala is 200. Could you explain the remaining difference, please?
Sachin, Rudra, could you?
So Rudra this side. So if you see in the group, if you add these 4 clusters, it won't total up to the group because the Nashik beds have been added, which we have mentioned in the down group, and 10 beds of Dr. Meda, the Meda Institute of Podiatry that we have taken, that has been added into the group. So what we thought is from the next quarter, because Nashik didn't have the significant revenue, from the next quarter we will add up into the Maharashtra cluster. We will create a cluster and we will show those things.
Understood. So is the 200 bed in Kerala part of this 4610?
No. Not in this quarter because it started from October.
Okay, that will also get added next quarter. Okay, and for Guntur and Kerala, which are like O&M, what would be the accounting treatment? Would you be fully consolidating the numbers, or would you recognize only the 5% income, revenue share income as income?
We'll be recognizing
only the 5%. Yeah. Go ahead, Sachin. Sachin, go ahead.
We'll be recognizing only 5% revenue shares since we are not having any equity in that company. So we will not be doing any consolidation.
Oh, okay. So the revenue numbers which you, the segment cluster-wise revenue numbers you report will not have their revenue.
Yes.
Okay, understood. And that is for Guntur as well as for Kannur.
Wherever we are.
Guntur and Thrissur. Kannur, we report the 100% revenue and EBITDA. There's a lease rental that goes out from that P&L for Kannur. For Thrissur and Guntur, we only report 5% as the operating income.
Understood. Yeah. Thank you. And one last.
Yeah, sorry. Srinath here. I would like to clarify. I think there was one question earlier, I think from JM or some, I'm not able to recollect. The thing is that, when we are talking about asset light, at least in Kerala, we are talking about all the bits coming into our control, and the revenues, profit or loss is going to be to our account. So that is the main asset light and management model that we are talking about in Kerala. So just a clarification.
Okay. And can I just get an estimate of the full year capex for this year?
We don't have the numbers offhand, but can we share that? It's part of the presentation, and we can share that with you separately.
Sure. Okay. Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Participants who wish to ask a question may press star and 1. The next question is from the line of Ankush Mahajan from Axis Securities. Please go ahead.
Sir, congrats for a good set of numbers. So my first question is, if we see from the last 4 quarters, earlier we have on a consolidated basis, we have a ARPOB in the range of 30,000, 31,000. Now it is in the range of 38,000, 40,000. So what are the reasons behind it that the ARPOB has increased? First one, and the second one, if we see across the industry for second quarter, the major growth is driven by the increase in occupancies. But in our cases, the growth is majorly increased by the ARPOB growth, and occupancies has come down. So would you throw some light on it?
That's something we should be happy about. No, it's not a seasonal impact, and it's an impact that it's going to sustain for the coming quarters as well.
Okay.
But as far as the ARPOB growth, I think, as you indicated earlier, there has been some impact on price revision from GIPSA and some insurance renewals. And most of it is also because the ramp up in Sunshine, ramp up in Nagpur is coming largely from quaternary and tertiary care.
Okay.
So the ARPOB contribution there is also a little higher.
And sir, last one is, what is the margins guidance for the full year? EBITDA margins?
I think what we have delivered for H1 will continue to something that we'll deliver for H2 as well. 27-28%.
Thanks, sir.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Rahul Jivani from IIFL Securities. Please go ahead. Mr. Rahul,
Hello.
your line has been unmuted.
Yeah, hope I am audible.
Yeah, Rahul, you're audible.
Yeah. So, sir, on these two assets, Thrissur and Guntur, where we would be getting just 5% revenue share, can you talk about your thought process in terms of taking on these assets? Because typically in O&M model, at least for some of the other O&M models which we have been having, we give out 5% rental revenue share. Whereas for these two assets, because the economics would just be 5% revenue share for us, do you think that given the economics, it made sense for us to take on these assets?
So, Rahul, the plan is, given the current debt situation in the company and our diligence, we didn't want to exceed the net debt to EBITDA as 1:2. And we found some opportunities, and we were able to structure some of these opportunities in such a way that the promoters were okay that we take full control of running the hospital and scaling up and ramping up the hospital. But eventually, maybe in a 4 or 5 year timeline or a 3 to 5 year timeline, we can bring these assets back into KIMS, either through a merger or through infusing 51 primary and getting to 51.76%.
Sure, Dr. Abhinay. So would we have first right of refusal for acquiring these assets? Okay.
Correct.
Sure.
In fact, we'll have an option where we can exercise it at the end of, at our discretion, at the discretion of KIMS, between the third to fifth year or even later, where we can bring this under KIMS. So when the debt situation is better and we're able to buy out these assets, we'll start buying out these assets.
Sure, Dr. Abhinay. And have we had any, let's say, agreement in terms of the multiples which we would be paying for these assets going forward once we try to acquire them?
It will be on par with the, in any tier 2, tier 3 markets, it will be less than sub 10 kind of a number.
On EBITDA?
On EBITDA.
Sure. And the second question which I had, Dr. Abhinay, was on this expansion plan. Now, the expansion plan which the PPT talks about, there our spend is going to be around 1,600 crore. But out of that 1,600 crore, Thane and the 2 Bangalore assets were there, which would now soon get commissioned in fourth quarter. So of the 1,600 crore capex, how much have we already incurred so far? And then with the, let's say, the expansion which we are targeting in Kerala and the existing units, what kind of a capex spend do you expect in 26 and 27?
So Kerala, as far as Kannur is concerned, we have already spent whatever you're seeing in the current debt. It also includes the debt for Kannur. So that is already taken care of. As far as Thrissur is concerned, the spend will not be more than 30-40 crores from the KIMS side for its scope of work. As far as the expansion plan of 1,600 beds, I'm not sure if I have the right number, but I think to the tune of 800-900 crores spent has already been done and is already factored in currently. But we can check the exact numbers and come back to you, Rahul.
Sure. So of the 1,600 crore, you are saying 800-900 crore has already been incurred?
Yeah, or maybe a little less than that. Rudra, do you have the numbers offhand?
So Rahul, we have already incurred to the tune of 800 odd crore on these projects, Bangalore and Thane, which are in pipeline. Nasik is already done and that's still done on 30th September 2024.
Okay, so the remaining spend would essentially be for our existing units, which is, let's say, Kondapur, Anandpur, Srikakulam and Ongole.
Yes.
Sure, sir. And sir, can you update us in terms of the Kondapur expansion, how that is progressing? So Kondapur, we were going to add 500 beds and 100 to 150 beds were supposed to get commissioned or will get commissioned in first quarter of FY27. So how has the progress been there?
It's on track, Rahul. We may commission it maybe a quarter early as well. Might be able to commission it a quarter early. But for now, things are on track for us to be able to commission on FY21, quarter 1 FY27.
Sure, Dr. Abhinay. And how many beds would you be commissioning in phase 1, 100 to 150?
So given the traction and given how things are moving, I think an incremental 200, 250 beds is what we will commission. So we'll move the current 250 and commission an additional 250, so 500, 600 beds.
Okay, sure. And that you are saying can get commissioned maybe a quarter earlier as well?
Correct.
Sure, sir. Thank you. I will join back the queue.
Thank you. The next question is on the line of Anubhav Shahu from Macro Research. Please go ahead.
Hello. Thanks for this. What do you understand? Since we have been exploring various types of hospital business models for last few years, whether it's O&M, lease one, or doctor partnership kinds. So for the inorganic initiatives, could you summarize what are the key parameters we are looking at while finalizing a target, and what payback period, peak debt equity, etc. we are looking at? And if you can also define or redefine the catchment area now we are looking at.
Sorry, your first part of the question was not clear. Your voice is not very audible.
So want to understand what are the key parameters we are looking at while finalizing a target for inorganic this thing. So I mean maybe in terms of payback period we are looking at for the target, and what peak debt equity we are comfortable at the group level when we are looking at this kind of acquisition over the years.
I think, like we had mentioned in the past, I don't think that changes anything. We will continue to look at 350, 400 beds as the minimum size for us to set up a hospital. anything that we don't see a visibility of 100 crore kind of an EBITDA potential, we may not continue to look at. And even if to begin with is just 150, 200 beds, as long as there's opportunity to scale up to 400, 500 beds or 350, 400 beds, depending on which market we're operating in, I think we're pretty comfortable as long as we have that line of visibility to scale up. As far as net debt to EBITDA, I think we're very comfortable to maintaining it at a net debt to EBITDA of 1:2 at a console group level. And we should, except for 1 or 2 quarters in between, we should be able to stick to that through the year.
Okay. And in terms of ROI or payback period, we are looking at while investing in those assets. Any timeline?
5-7 years is what we typically look at, but because these are now larger format hospitals, we should take a much longer term view on these hospitals, because we're acquiring land for building hospital over the next 10 years time. So we're building phase 1 over it, and then you build phase 2. So you'll have to take a little longer view. As long as we are able to invest efficiently and the capital per bed is on par with the ARPOB per bed, and the revenue growth is happening and EBITDA margins are happening, ROI should not be such a concerning factor.
Okay. And you may have mentioned before, could you just remind me please how much spend we have already done this year, and how much is left for, how much is planned for the rest of the year and next year?
So Anubhav, I will try to answer this question. So as far as Bangalore is concerned, up to September 24, we have spent almost like 260 odd crore. For another Bangalore project, we have spent about 10 odd crore. For Thane, we have spent about 350 odd crore. So Nasik, we have already spent about 155 crore. So this is the total spend which we have done up to September 24. For the remaining part of the year for Bangalore, both the assets, since most of the medical equipments have to be deployed, we may have to spend up to about 100 to 125 crore for each asset. For Thane, we will need about 125 crore for medical equipment. So this medical equipment spending only is pending. Otherwise, civil spending, most of the things have been done. And in fact, for the medical equipment spending also, we have paid some advances. So this is what the position as on 30th September 24.
Okay, that's good. And so what's lined up for next year in terms of spending?
Sorry, your voice is...
Sorry for that. So in terms of capex, what is lined up for next year, next fiscal year? How much we budgeting?
So next fiscal year, I think, as Abhinay has also said, most of the assets which we are doing are on a asset-light model. Most of the spending which is required for the existing Bangalore and Thane asset would be done by the end of the financial year. So next year, about some 500 or 600 crore. Abhinay may correct me if I'm wrong.
Yeah, that's it.
Okay, that's it. Thanks a lot for that. Thank you, very helpful.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, am I audible?
Yes.
So just on this Andhra Pradesh cluster, the occupancy sort of is lower year over year, or even if I compare it with FY24 number, while the beds are largely stable. So, if you could just throw some light, maybe I'm not sure if you have already responded to this, but just to understand, how do we think of improving the occupancy in first place at the existing sites, and then subsequently, we've been going to invest at Anantapur and other centers within Andhra Pradesh. So if you could give some idea in terms of at least the places where we are adding significant beds, where the occupancy stands at those sites. Thank you.
So as far as Andhra Pradesh is concerned, there are some hospitals where the occupancy is still low, and there are some hospitals where the occupancy is above 90%. So Rajahmundry, Anantapur, and such hospitals, the occupancy is very, very high, and that's why we are adding more bed capacity there. a place, Nellore, for example, Ongole, for example, where the occupancy, there is still opportunity. It's only at 30-40%. So 40-50%. We can still add, the growth can happen. But when we acquired these hospitals, they were very large format hospitals. And we knew it will take that much time for it to scale up. So there was, and we're okay with it. So, and also a part of the occupancy dip is because of acquiring Queen's NRI, which came in. That could be one of the reasons why there is a dip.
And this 90 to 110 crore investment for Anantapur for 250 beds. So this is like lower than, let's say, typical run rate of 1.5 or 2 crore per bed investment. So if you would just share, why the investment per bed number looks lower as far as this investment is concerned.
I think in that market, it's difficult for us to get beyond that. The ARPOB in that market is only around 70-80 lakhs per bed. So we'll have to play around within that ARPOB range.
Good. In fact, just on conceptually, since you highlight both ARPOB as well as ARPP in the presentation, at least this quarter, it seems that ARPOB growth is quite 22%, while ARPP growth is just 9 to 10%. So, I mean,
there's a dip in ALOS, right? So that is also going to reflect there.
And lastly, for Thane project, and the other where the OPEX of, as you highlighted in the earlier remarks of the OPEX drag of say 30 to 40 CR, this is with the assumption of what kind of occupancy will be, sort of end in 12 months of operation.
Sorry, could you repeat the question, please?
Sir, in the earlier comments you highlighted OPEX drag of 30 to 40 crores that would happen on account of addition of new hospitals, including that of Thane.
Right.
Right. So those new centers, probably what kind of occupancy assumptions are we going by, let's say in first year of operation?
We're assuming a 30% kind of an occupancy on the total bed capacity, 25 to 30%.
Understood. Got it. Thank you, sir. That's it.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Amaya Chalake from JM Financial. Please go ahead.
Yeah, thank you for giving me the opportunity to ask follow-up question. So first question I have is on the KIMS Cuddle. Abhin, is it possible to tell how many hospitals currently have KIMS Cuddle and what are the plans in other hospitals? When are we going to add that? And also if we could give some color on the ARPOBs and the profitability of this KIMS Cuddle unit. Thank you.
So, Amaya, we don't track that separately. It's part of the adult hospital. It's just one more specialty within the hospital. So we don't look at the profitability of that department separately. But right now it is operational in 7 hospitals. And as and when, like in Anantapur, we're adding additional infrastructure to start mother and child. As and when the infrastructure gaps are fulfilled, we will keep adding mother and child in all specialties. As far as Bangalore, Thane, and any other new project that's coming up, we're adding mother and child on day 1.
Okay. So, but in terms of ARPOB and profitability, will it be more than the company average, or how is it? How should we look at it? Is it going to improve our...
ARPOB will be similar. Similar. Again, at a gross margin level, it is, because the consumable cost is significantly low, the gross margin is better than the adult specialty. But because we don't look at it beyond gross margin, we don't track it at an EBITDA level.
Okay, sure. The second question I have is on the Wipro agreement which we had done recently, 700 crore agreement. How is it going to help us operationally, and how much time we have to do annually for this kind of agreement?
So this is a contract that is spread over the next 3 to 5 years. This takes into account the replacement of the current hospitals, because most of them are 10 years plus old, and a new hospital. So it just gives us leverage to negotiate better because we're doing a group order. But there is no... there's no time pressure on this. We can execute this over the next 3 to 5 years.
Okay. But will it have any P&L impact, or it's not going to change materially?
No, all of
Existing lease, whatever we have, agreement which we have.
Correct. It has no impact on P&L. All of this is captured in the overall capital numbers that we're talking about and the debt situation that we've already spoken about.
Okay, sure. Thank you so much. I will join that. Thank you.
Thank you. The next question is from the line of Rahul Javani from IIFL Securities. Please go ahead.
Yeah. Sir, on the Kerala cluster, while we are targeting to add, let's say, 3,000 beds over the next 5 to 6 year period, and that would be dependent on M&A. But realistically speaking, let's say over the next 3 year period, what kind of a bed capacity can we factor in for the Kerala cluster? So would it be closer to 1,000 or 1,500 beds over next 3 years?
At this point, Rahul, we have 2 assets, one in Kannur, one in Thrissur. So these are certain projects, and cumulatively we'll have 400 beds in Kannur over a period of time and 350 beds in Thrissur, so 750 beds. So nothing else have we signed definitively. We are exploring multiple opportunities in an asset-light model. And if it does happen, then we could potentially look at adding another 500 beds next year in an asset-light model. But again, like I said, it's still in discussion. There is no definitive agreements there.